Mila, I am going to do this past paper for grade 9. It is on analysis of transactions. But before I get to that, the most important or vital part when preparing the accounting equation or analysis of transactions is knowing under which element accounts fall and which accounts fall under that specific element. I will start with assets. Assets increase on the debit side, they decrease on the credit side. What do we have under assets? We have bank. The more money we have in the bank, it will increase on the debit side. The more we lose, it will decrease on the credit side. Trading stock, when we buy more stock, it will increase on the debit side. When we sell or get rid of stock, it will go on the credit side. When people owe us more, debtors control will go up on the debit. When they pay us back, it will go up, down on the credit. When we buy more land and buildings, we'll put it on the debit. When we lose or sell land and buildings or get rid of land and buildings, we will credit it. When we buy more vehicles, we will debit them. When we get rid of vehicles, we will credit them. When we buy more equipment, we will debit them. When we get rid of equipment, we will credit them. The reason why I say get rid is because it's not always selling. Sometimes it is taken by the owner for personal use. Then we've got an owner's equity, and under owner's equity, we have side. C is for capital. Capital goes up on the credit side. This is when the owner contributes money into the business. When we earn money, any income, so I didn't put examples of income. So examples of income will be rent income, fee income, commission income, sales income, rent income. I don't know if I mentioned that, current income, all types of income. When the more we earn that income, it'll increase on the credit side. And the less of that income we earn, it'll decrease on the credit side. Drawings is always drawings. So there's no, it's there, we don't have a lot of examples on that drawing. So we only have the fact that the owner will take probably equipment, we'll put it on the debit side of drawings. If the owner takes trading stock, we will debit drawings, credit trading stock. When the owner takes money, we will debit drawings, credit bank. When the owner takes stationery, we will debit drawings, credit stationery. So we debit whatever the owner takes, we debit drawings, but we credit whatever the owner takes. So when the owner takes anything from the business, we debit drawings and we credit anything that the owner took. So we credit trading stock if the owner took trading stock, but we debit drawings. We credit stationery if the owner took stationery, but we debit drawings. Expenses, we have a lot of them. We've got rent income, trading license, consumables, cost of sales, rent expense, packing material, service fee, bank charges. I'm trying to think of all the expenses. The more we spend on those, your expenses will increase on the debit side. Stationery, I don't know if I mentioned stationery. When we buy stationery, we debit stationery because it's an expense. When we buy consumables, we'll debit consumables because it's an expense. When we buy packing materials, we debit packing materials because it's an expense. Now, income and capital increase owner's equity. However, drawings and expenses reduce owner's equity. Guys, once you know all of this, you're done with accounting. We call it side. The ones that I highlighted in red is because they reduce owner's equity. The ones that are highlighted in green, they increase owner's equity. Okay, we good. All right. We've got liabilities. The more we owe people, the more we credit it. So loans will increase on the credit side. So these are examples of liabilities. We also have mortgage loan. When we owe more, we'll credit mortgage loan. When we buy things on credit, normally when we buy things on credit, I normally say we bought them on account. It doesn't mean bank account. On account means we bought them on credit. Okay. Then I'll tell you if we bought on account. I'll normally say it's a direct deposit or it's an EFT. So there you know that we used our bank account. When I say on account, it means we bought it on credit. Okay, so under what circumstances are we going to debit liabilities? We will debit liabilities when we repay them. So when we pay back the people we owe, we will owe less. And when we owe less, we'll debit the loan if it was a loan. We'll debit mortgage loan if it was a mortgage loan. We'll debit creditors control if it was creditors control when we pay them back. Got it? Guys, this is all you need. Once you get to this, we are done. Okay. We have done almost all the definitions to help you decide whether this is an expense or whether this is income, whether this is a asset. I explained income is increases in assets and decreases of liabilities, other than and it increases owner's equity. And expenses, they increase liabilities, reduces your assets, and decreases owner's equity. Okay. So when you see that your asset is going up, it could be because you will debit that asset, but you will credit. Sometimes there's a high chance that you will credit income. For instance, if we made money from rent income, we will debit bank and credit rent income. It's because the definition of income specifically says that it increases assets and reduces your liabilities. But that could not be the only reason. Sometimes the reason why we can have an increase in trading stock is because we bought it. So when we buy trading stock, it's not because of income, but it's because we bought it. So trading stock will increase on the debit side, but we will reduce your bank on the credit side. So this is where I just need you to understand what the difference is between an increase, what increases your asset or decreases your asset. But let me not get that deep because that probably confuses you. Let me get to the first example. It says we bought trading stock. You see what I was talking about not long ago? We bought trading stock via internet banking. So they're giving us the first account there. The first account they're giving us is trading stock. I am getting more because we bought. It means I'm getting more of it. So when I get more of trading stock, I will debit trading stock. And that's what I'm going to do in my accounting equation. I am going to debit trading stock. How did I buy that trading stock? They said I bought it via EFT, right? Since I bought it via internet banking, I will credit bank because bank is affected. And when I credit bank, I credit it because it is an asset and assets decrease on the credit side. Okay. So both trading stock and bank are assets. The other one is a plus and the other one is a minus. Got that? I am simply going to credit bank. And I debited trading stock and credit bank. Under assets, I will have plus. The plus is for trading stock. The minus will be for bank because both accounts fall under assets. Owner's equity is zero because none of these accounts fall under owner's equity, and none of these accounts fall under liabilities. That is why under liabilities I've got zero. Okay, let's go to the next one. What does it say? Received a loan amount of 90,000 from Nerd Bank. When we receive a loan, bank is going up because we are getting money. A loan means we are getting money. Okay. So bank is going up and bank is an asset because we are getting money. And I am going to debit bank because it's an asset. We're getting more money. And how did I get this money? By taking a loan. Loans fall under liabilities. If I take a loan, it increases what I owe, and liabilities increase on the credit side. That is why I am going to credit loan as well as the name of the bank that I took the loan from, which is Nerd Bank. And the assets I will have plus, the amount was 90,000 and the owner's equity is zero. Bank is not owner's equity, loan is not owner's equity. So that's why I have zero. A loan, however, it is a liability. I am owing that bank more, and that's why I will add to my liabilities. I will add 90,000 rand to my liabilities. Let's move on. Then it says number 3, received 10% commission income. You see, they're telling me that on sales, okay? So these are sales. I need to find 10% of sales, and 10% of sales will give me 9,000 rand. So I received 9,000 rand. That 9,000 rand is commission income, excuse me. When I receive it, commission income will increase bank because I'm receiving money. See, it increases bank because I'm receiving money. Bank is an asset, so I will debit bank. And commission income is income. Income increases on the credit side because I'm getting more of it. So it increases on the credit side, okay? And just know that it also increases owner's equity. I am going to credit commission income. And the assets, I will have plus 9,000, which is the bank. My bank is going up because I'm getting money. Commission income increases owner's equity. It falls under owner's equity. Liabilities will be 0. I'm not borrowing money from anybody and I'm not paying anyone back. So that's why under liabilities, it is 0. Liabilities only is affected when we owe someone more or we owe someone less. We're not owing anybody here. And remember, when you prepare the accounting equation, you are preparing it on behalf of the business. Let us move to the next transaction. What does it say? We repaid 40,000 loan from Nedbank. You see, this is the reverse of number 2. Whatever we did in number 2, we're going to do the reverse. So when we repay a loan, I did say this earlier on in this video. When we repay a loan, it means that that loan is decreasing. But loans are a liability. Liabilities decrease on the debit side. So that is why am I putting a plus there? It is actually a minus. They decrease on the debit side. Hence, I am going to debit loan Nedbank because I'm owing them less. But why am I owing them less? It's because I paid them. When we pay, it affects bank. It means our bank is going down. And it goes down on the credit side. That is why I am crediting bank. A reduction of your asset means it's a minus under assets. Owner's equity is not affected. And a reduction of a liability means it's a minus under liabilities. Got that? Let's move on. Number 5 says the owner contributed 4 trucks to the business worth 350,000 rand each. I'll first take that 350,000 rand, times it by 4, and I will get 1.4 million. These are trucks that we bought. Trucks fall under vehicles. Vehicles is an asset. We're getting more of those trucks. So it means that our asset account, which is vehicles, will increase on the debit side. So we are going to debit vehicles. And then credit capital. Why am I crediting capital? We did not buy those vehicles. Instead, they were contributed by the owner. Excuse me. They were contributed by the owner. And the more the owner contributes, capital will increase and it increases on the credit side. I'm going to go to my accounting equation and credit capital. And the bank I will have plus 1.4 million, and the owner's equity I'll have plus 1.4 million, and under liabilities I will have 0. I did not buy these vehicles on credit. I did not buy them for cash. Instead, they were contributed by the owner. Any contribution by the owner goes to capital, and capital increases when the owner contributes to the business, and it increases on the credit side. We good? Lekker. Hurrying. Number 6 says that the owner took equipment worth that much. For what? For personal use. Whatever the owner takes from the business for personal use is debited to drawings. Drawings is going up on the debit side, okay? You need to remember drawings fall under owner's equity. They're going up. They go up whenever the owner takes something from the business, okay? What did the owner take? The owner took equipment. So what's happening to our equipment? Equipment falls under assets. It'll decrease. So it'll be minus. It decreases on the credit side. Okay. So we debit drawings and credit equipment. But equipment is an asset. A reduction of your asset will be a minus, and drawings is under owner's equity. And I indicated that the higher the drawings, the lesser owner's equity will have, okay? And that will reduce our owner's equity by the cost price of equipment that was taken by the owner. Liabilities will be 0. Let us move on to the next one. The owner's daughter took trading stock for personal use. We don't care. We still consider the owner's daughter as drawings. But what did they take from the business? The owner's daughter took trading stock. So trading stock falls under, does it fall under expenses? No, trading stock actually falls under assets. So we are losing stock, which is a reduction of your assets, which decreases on the credit side, okay? So I am going to debit drawings. We debit drawings whenever the owner takes anything from the business. You debit drawings for personal use. We credit trading stock because we are having less of stock, which also falls under assets. Less of an asset will be minus under assets, and drawings reduces owner's equity. Under liabilities, we will have 0. All right, let us move on to the next one. What does it say? It says that the business provided services worth that much to cash and carry. When we provide a service, please know that we earn a service income. So income increases on the credit side. I said the income that you earn from providing a service, we either call it a fee income, or we call it a current income, or we call it a service income. So this is us providing a service. It's still income. But did we get the money? Because if we got the money, I was going to debit bank, which falls under assets. Let me read further. It says, in exchange, cash and carry gave the entity packing material. Oops. So they didn't give us money. So our asset is not affected because they gave us packing material. And packing material falls under expenses. So when we get more of that expense, which is packing material, we are going to debit our expenses because expenses increase on the debit side, and credit fee income or service income because we provided a service. In exchange for this income, we got packing material. None of these two accounts fall under assets, so assets will be 0, but both of them fall under owner's equity. One, which is fee income, is increasing on the credit side, so it increases owner's equity. One of which is an expense, packing material. Packing material reduces owner's equity. It increases on the debit side. However, it reduces owner's equity. So the plus under owner's equity is for service income, and the minus is for packing material, which is an expense. It reduces owner's equity. And the liabilities, we will have 0, and these are the totals. We good? Great. Try this one now, which is question 3. Pause for 30 minutes as you try it out. So you need to complete this. Okay. Once the 30 minutes is over, please, once the 30 minutes are over, please press play and take a look at the solutions, okay? The first one was stationery. Stationery is an expense, so we debited. How did we buy the stationery? We used money, so bank will be credited, which negatively affects our assets, but stationery is an expense. It will reduce its equity, okay? Liabilities will be 0. Number 2, what happened in number 2? We received a loan of 200,000 from Nedbank. When we receive a loan, it means we are getting money, so bank will be debited, and we credit loan from Nedbank, which is a liability. Liabilities increase on the credit side. Under assets, we'll have plus 200,000, which is for the bank. Under owner's equity, we'll have 0. And the liabilities will have plus 200,000, which is a liability. We owing Nedbank more because we took a loan from them. Number 3, we received commission income on sales. So we had to calculate, which is 9% of sales. We had to calculate 9% of sales, and that gave us 27,000 rand. I am going to debit the bank and credit commission income. Assets increase and commission income increases owner's equity. In number 4, we repaid Nedbank. So we debit Nedbank because we're owing them less now. It is basically the reverse of that. We owe them less because we paid them back. Okay, so bank will be decreasing. Assets will be minus, and owner's equity is not affected. Liabilities will be minus. Please check out the rest. Okay, this is for classwork 3, question 3. The last paper will be question 5. And this is what we have as question 5. The first one says, bought packing material worth 24,900 on account, which is on credit. So packing material as an expense, we debit it and we credit creditors control because we didn't use money. We bought them on credit. So we credit creditors control. Okay, let me just show you the entire solution. Alrighty, guys, take the mark that you got as you marked and divide it by 32, times it by 100. Thank you, grade 9s, for watching, and I really appreciate it. Please let everybody know about this channel. It's such a great channel. Thank you, actually, for giving me the opportunity to continue doing this. Khotso.